So hello everyone, welcome back to Options Trading with Salman, and we are here on Tuesday. This is 26th of March, and this is 2:27 p.m. as you can see. And for this Tuesday, the 26th of March, market is completely flat. So whoever sold options today must have earned a really good profit in the straddle. Now I'll just show you one surprising thing. The US markets were down, and the India VIX is rising despite the market being flat. So here you can see that in general the calendar effect will come in. Calendar will actually give us a lot of profit, because suppose India VIX is rising even when the market is flat. What if market makes some move? Then how fast India VIX will rise? So that is a very great thing. So what we'll do? We'll start making a calendar spread. Okay. So let's check what all do we have. Let's check for 21000. Okay, here we'll check it over here. Strategy builder. Okay, so here we go for options. We go for 18th April option and we go for 21,000. 21,000, 18th April. We're not getting 21,000. This is surprising. Okay, we're checking the PE. Now we will get 21,000 PE. We can go ahead and sell this. And this P will buy 25th April. Now 25th April we will also buy the CE of 23,000 to buy, and 23,000 we have to sell the CE of 18th April, and this is just going ahead and selling it. Okay, so this is the calendar spread, a double diagonal calendar spread, and something is wrong over here. Yes, 23,000 modify. So here is the classic double diagonal calendar spread, 1:1. Okay, the peak profit here is around 5,000 here and 6,000 here. So market moving in either direction, we will incur some profit. So break even is very nice. We have a huge break even. On the upper side it is 23,000 somewhat. So this is not showing the upper side break even. So after 10 days, as you can see, there will be huge profit on the upside, but there will be a loss in the downside. So what we'll have to do, we'll have to fortify the downside. Okay, and if we go ahead and fortify the downside and we buy it to, okay, now what we've done, we have sold this to, we make it double the lots. What will happen here? So here is the deal. So downside, and now let's see how this turns out. And yes, you can see in 15 days, 12 days, see, now downside is also fortified. Okay, so we have to make some kind of a ratio over here. What we'll do, we'll increase this to, we can go this with like 6 lots. Okay, and then go this with 6 lots and that with 8 lots. So that would be a good ratio. Here is the 8 lots. And in the bottom, in the center, there is like a loss of 12-13k, and then here there is a profit. But again, if we do this intermediate levels, we will always be in profit. And I think this is a good strategy. We can go with 8 lots and 6 lot, and the estimated margin in the premium is 3.4 lakhs. Now next thing that is up to us over here, we can start selling extra calls and extra puts as and when the market moves in certain direction. Okay, if the direction is quite strong, only then we will sell, and we will sell that in weekly, probably in weekly, or we'll sell in the same 18th April period. We'll sell this again. Okay, I'll again show you the election dates. Okay, it is from 19th April. So 18th April premium will not be that much, and it will decay also very fast. So here what we can actually do is, like, we can start selling two lots extra. Here I went two lots extra, and here you see how nice this became. So central profit has become 7,000 and here it's like 45,000, 37,000. What are the Greeks? So Vega is highly positive and theta is positive as well. What if we can make this make this 12 lots? Does my premium and my margin permit it? I'll see. Yes, but again I'm coming in between the 2 sigma movement and that is a problem. So we'll make this 10 lots. Okay, what was the impact? But making it 4 lots extra. Check out the Greeks. Vega is highly negative. Okay, so we go back to the same items. So you can see theta is also positive, Vega is also positive, and the futures chart is here, and the payoff chart is here. So this is a decent payoff, and there is a central loss, and you can see on 17th day it would be something like this. On the 10th day it would be something like this. Okay, 6th day, 7th day it would be like here it would be 1,000 profitable, so you won't have to touch this. Okay, 13th day it's not that much profitable. Okay, 18th day it is coming somewhat profitable, and then it is zooming up. So this is something that will decay very late. Okay, so every day will not get much of a traction over here. Every day there will be a slow decay, but overall in general there will be a good profit. What we can do is increase this flattish period, and on 18th of April, let's see what all strike prices do we have. 20,000 strike prices, 20,500. No, we don't have 20,000. We don't have a 20,000 level strike prices. We have 21,000 only. So for now, we'll have to do with this, and let's keep it equal now for now. Okay, so now we are getting a 2 sigma coverage, so there need not be much of a movement, and if we go to intermediate levels, yes, we'll see some decent profit. Okay, if the market swings a lot. Okay, cool, no worries. This is how we will go. Okay, we'll save the strategy. Okay, we'll call this for now, and we'll rename this real portfolio analyze trade, and let me deploy this 21 and 23 1000 PE, and this is Nifty 21,000 PE of Nifty. We have April Nifty April 21,000 April. Okay, this is here and this is here. Now we need 23,000 CE Nifty April. 23,000 Nifty April. Here we have this, and then Nifty here we have this. Okay, 18th April Nifty, 25th April is here. Okay, we clear this out. Delete this CE. Okay, 21,000 PE and 23,000 CE. 8 lots P and 6 lots CE. So P is 8 lots. So we start with the selling part. So here we go ahead and sell this at 8 lots. 400 limit sell. Okay, and 6 lots of CE. Go ahead here, sell 300 quantity, sell. Okay, so now why this is showing pending. Okay, now the margins here are okay. CE we have to buy again at 300 quantity. We have to buy. CE is triggered, so we'll have to ensure that this gets triggered for 35.5. Okay, this is highly illiquid. 35. Okay, PE we just have to go ahead and buy, and this is PE that 8 lots. Buy. Okay, market depth is quite thin over here. 19.5 something you'll get here, and the CE is at 34, so we will get something as 34.5 for 6. It's very poor market depth, and the volatility is higher here, and not sure why. So order is pending. This is very bad. Yes, very bad. Situation is very bad for the CE. The liquidity is quite low. See, the positions are quite disbalanced, as you can see. The PE that we sold now is already trading higher, and that will be the condition of this CE. But unfortunately, we'll have to take this. Unfortunately, we'll have to take this. Okay, 6. We'll have to take this. Now 33.6 also there is no buyer. Just imagine 33.5 only the next buyer is there. Okay, we just go ahead with this buyer and trigger our trade, and let's see. Margins are decent. So here let's just shuffle the instruments. Okay, 21,000 PE, 31.7 and 19.5. So it's 19.5 modifier, and this is 31.7 modifier, 62.85, 33.5. And the India VIX is 12.77, so save the strategy. 12.77, and this is double diagonal calendar for strategy YouTube PNL YouTube. Okay, and now let's go to portfolio and check it. Yes, this is the double diagonal calendar, and let's assume the 50% of the peak profit. So here's the peak profit is like 43,000. So again, if we can gain 23,000, 20,000 odd levels from here, it would be great achievement. So let's see how we book it as and when our this thing. Okay, one side goes beyond the 2 sigma, we'll start keep coming in. Okay, and as you can see, the VIX increases. VIX increase 20%, 30%. See the how this region is reducing. You know, VIX falls down, then this will be a problem. This region will keep on increasing. Yeah, so that is how it will change. But again, let's see within a few days how the market moves, and based on that we will decide the further movements. That's it for this video. Thank you so much. Hello everyone, welcome back to options trading with Salman. So today we are on 27th of March. This is Wednesday, 11:43 a.m. 27th of March. So here we will not book any profits, although our market has moved forward. Okay, and our range is quite strong. What we'll do, we'll increase some risk at the lower end. Here let's check out the strategy and check out the margins. So margins consumption is quite less, so we had around 10 lakh of margin. We have only consumed 3 lakhs. So what we'll do, we'll consume some more margin and we'll go ahead and sell PE. So here we'll go ahead and increase the risk appetite. Here we'll increase 100 lots and the 17.5 limit. So 100 quantity we are increasing, and the order is not getting executed, so we'll check the market depth. Okay, So I think this should get executed. If not, we'll go to 17.2, 19.25. So the buyer is having a 300 quantity, and as we are the seller, we are having a 100 quantity. So buyer is having a higher quantity, and overall buy is higher of 21,000 PE. So I hope we'll get this price. If we don't get, it's just 0.05 lower. How long should we wait before it actually triggers? Okay, how long should we wait? So here I just keep this thing open and we'll go here 21,000 PE. We'll just increase the risk. We get 10 lots. Let's just modify and let's close this. Okay, margins are reduced and we have 19.04. Will be reduced to 19. So here is the thing. Okay, we save the strategy. India VIX of 12.77. That's fine. That's the same thing. So overall, what we have done, we've brought down this lower break even. We have brought this inside, but overall, the strategy is still decent, and I'm not seeing much market movement. Also, we are already in the center negative zone. So this zone is basically 21,419 and 22,620. So the market has to break out 500 points up or down to actually give us some kind of profit. But you can see this T plus zero profits. Okay, so at the upper end we'll still be in profit if the market is moving higher in the short term. We have to achieve 20,000 over here. Okay, so our peak profit here is 35,000 and here it is 50,000 approximately. Sorry, here it is 50,000 approximately. So that's it for this video. Thank you so much. If we make more adjustments, I'll let you know. Today we are on 28th of March. This is Thursday, 28th of March, the expiry day. 28th of March, we are at 10:35 a.m. as you can see here. And today we can see that there is a sign of positivity. Nifty is positive. This is the daily chart. So Nifty tried to went up here. Okay, it went up here, then it came down. Here it took some kind of a support, and then it's trying to go up again. Here we can see that this can form some kind of a shoulder pattern, of course, but this low is broken, so maybe a disoriented shoulder pattern kind of thing. And if you see a triangle, then this is a bigger triangle as well. Okay, this is a breakout triangle. Maybe if it goes up and then it breaks down, then it will break down a lot. Okay, so here you can see this bigger triangle. I'll just show you with this. Okay, so here is this. Okay, this is here, and here the lower end of the triangle. Okay, suppose the market goes up here. Okay, slowly it is traveling up, and suppose if it comes down from there, and if it breaks this, then this is going to be a long breakage. Okay, and if it breaks upper side, then that is also going to be a long kind of a breakage. Okay, so we have to wait for this point. Basically 23,000 levels is becoming a very crucial level. So if the market breaks 23,000 here non-stop, if it goes up and breaks 23,000, then it is going to break and go up quite a lot. And if it falls down, then we'll have to wait until it falls down to this kind of this level. Maybe here this region, 21,000 kind of a region. Okay, 21,000 to 21,200 region. If it breaks and then it goes down, then it will go down a lot. So that's it. That's what I wanted to explain. I will basically remove all these drawings. Remove drawings. What we'll do the adjustment for now. Okay, this is our chart. Just reload this. Luckily, I had already logged in. So here the market is moving in the positive direction, and our lower break even is outside the 2 sigma. So when it's outside the 2 sigma, what we'll do, we'll upgrade over here. So we can do is go ahead and add. We'll add 100 lots, and here is the sell. Let's check the market depth. So again, this gap is huge. Okay, so we'll get something at 12.6. So this is executed. Okay, so margins are left is 4.27 and the position is 600 at 17.97. So that's almost 18. It will do. We'll adjust it for 18. And strike price we have not moved. We are at the same place. Let's modify here. Okay, and we save the strategy. Let's check out the condition of India VIX. I'm sorry. Let's check out the condition of India VIX. Here we have India VIX is rising up. Okay, so but that is also slight rise, so that's fine. And here you can see the 2 sigma movement. If it goes for a 2 sigma movement, there's not going to be a much of a loss. Okay, but if the markets comes down and crosses this 2 sigma movement, then the loss is going to be huge. So here this adjustment is fine, and we'll watch how things go out, and then we'll decide the path forward. Okay, so that's it for this video. Thank you so much. Bye. Hello guys, welcome back. So this is Capital Investments options trading with Salman, and my company is Capital Investments. Here we can see today is 1st of April, Monday, and we are at 10:01 a.m. So this is the new financial year. Here what we can see is this is our strategy. I just reload this, and the lower break even is already beyond 2 sigma move. Okay, this lower break even is already beyond 2 sigma. So what we can do, we can actually bring this down to like 21,200 levels. So this is 600 ka PE. So 21,200 PE. What is the value? We just check 21,200 PE Nifty 18th April. 18th April we are selling. So it is 13 rupees. What we can do is we can exit here. Exit buy this, and we can sell this at we can sell this 500 lots, 500 quantity only. Check the market depth first. See, market depth is very bad. We are not getting a good decent value over here. 21,300. Maybe we'll go for 21,300. Check the PE over there, and 18th April 21,300 PE is here. That is 15, and market depth is bad as well over there. Let's just go ahead and check. 21,500 is here. That is coming inside the 2 sigma, so it's not worth it. So we'll have to come to 11.5. Let's check this out. Okay, so the buyer is having 700 quantity. Sorry. Let's check this out. And the India VIX is going down, unfortunately. Even at 11.5, it's not getting triggered. Let's check the positions. Here we can see our bot CE and PE. PE has already decayed so much. Okay. And the 400 lots is decayed. This is the value. Orders not even getting triggered at 11. Let's check out 11.5. It's not getting triggered. Let's check out at 11. It's very bad. The liquidity is so poor. I'm not sure how can we get such a poor liquidity over here. I think we will have to move to 21,500, unfortunately, and we will have to take for the Nifty. We'll have to move both the legs. So Nifty here is the 18th April leg of P and the 25th April leg of P. Both we'll have to move. Okay, 21,500 liquidity is okayish, okayish liquidity. And here is the P. Oh, these are all not liquids, not liquid. Okay, so we'll cancel the order. Not worth placing this order. We'll do yes. Okay, we'll go for position, and we'll exit this. We'll buy it out at 13, and let's see. That order is also open, 21,000 PE. 25th April. Let's check out the market depth. 15. Can go for 12.8. Okay, so we already bought this. Now we can exit it. Okay, here we go ahead and we have to buy this 25th April. We'll go ahead and buy the 500 lots. 31.75 we have to buy. Okay, and here we'll go ahead and sell this 17.9 we'll sell it. Let's see if it gets sold. Okay, 517.75. 21,500 P, so you have to change this to option strike rate 500 PE, and the sell lot is our 700, so that is 14 quantity. Market is trading at 17.3, we can go for 17.4. So for now let this be there. The bought quantity is 10 lots, it's 21,500, and we have bought this at 31.75. So this is something how it looks. It says fallen down, so we'll save the strategy at 1.7. We don't have much problem. The market is flattish here. The peak is very less. Market is flattish. The order is not getting triggered. We have to come down to the level 17.3 only. Okay. Okay. Even at that levels, it is causing problems. P is falling bad, very bad, very bad. Into 5.2. Okay. 17.2 levels also in proper position. I think order is triggered. We are the best seller, and the margins are 3 lakhs, so that is decent margins. We can come down to 17.1. This should get triggered now. At least very bad liquidity, that's for sure. Okay, the buyer is not ready to buy. Okay, it's coming at 17.05 and sitting there. We want to clear our positions faster. 17.13. Okay, so safe strategy. We'll check out the PNL. I'll show you the PNL, the back office reports, and we'll go for tax PNL report, FNO, and this is the year. Let's see. It will not get generated. In fact, it's not getting generated also. This is the first day of the year, so we'll check the PNL tomorrow. So that's it. That's it for the double diagonal. I'm sorry. That's it for the double diagonal calendar spread adjustment. So thank you so much for watching the video. Before going, we'll just plot this levels. So we'll take the green horizontal line and we'll plot this levels. So we'll be making it a little bit of blue. Okay. So here is the upper end is basically 23,400. 23,400 here, and if you can clone this, I will bring this down. This is 21,500 levels. We'll go for 21,345. 45. Okay. So here is the level approximately. So that's it for now. Thank you so much. Bye. Hello everyone, we are back. So this is the same day. This is 1st of April, Monday, and we are at 11:08 a.m. The India VIX is falling down, but the market is looking weak. What we can do is we can reduce the upper break even. Okay. So here we can see this is the high point, and it is getting rejected at the high point and it's trying to go down. Let's look at this chart. So here it is. Here we can reduce the upper break even. What we can straight away do is exit this. Okay, book it 50 at 105.3, sell it off 105. Okay, so this is booked completely. This is and then 250 at 62.85. So here is the CE. We reduce this one lot, modify. Here it is. We'll save this strategy. Now, as the days progress, this is how the market will look like. So it will be positive in the center, and if the market moves to extremes, then we know by the end of the tenure it will still be positive. So here, the mistake what we did over here is basically we have brought this within the 1 sigma. Okay, and if the market reverses, then we have to make another adjustment. So let's hope the market does not reverse again. From downward it should not go upward. Now because of this reduction, basically our break even has come to 23,200. Okay, this is 21,300 and 23,200. So 23,200 is here, somewhere around here. And if this market goes down and comes, bounces back to 22,200, we will be in a decent position. So let's observe if it's going and breaking this upper point 20,520, then we'll have to probably buy again. Okay, we'll wait and watch for that. That's it for now. Thank you. Why? Okay, here is this trade, and then I'll directly sell this off, and here is the 7 lots I have to sell, 1.5 and 7.7. Let's see if I can sell this and modify 7.55 only. I'll sell. Okay, this is gone. Here is the margins left, and here is the premium. Okay, so we have just 4 lots and we have 7 lots, 14.6 and 7.7. So I'll just go ahead and adjust this at 14.6 modify, and here 7.7. Okay, this is stuck here. So today is basically Tuesday, and this is 2nd of April. We are at 10:03 a.m. The market has been flattish from the last 2 days, and the VIX, India VIX, has fallen down, due to which our strategy is not giving any profits. In fact, is giving like every day 500 losses. So what I've done, I've tried to adjust something over here in order to increase the range. Okay, once the range is increased, probably we can start buying off the the bot hedges we can start closing, and that will actually result, once we close the bot hedges, that will actually result in profit in the middle. So for now we have a loss from around 21,500 till 22,000. So this complete region, okay, we'll have a loss. So what I'm doing, I'm trying to just increase the outer break evens, and inner loss we'll try to somehow close this. Let's reload. This is stuck. Okay, for now, see this curve looks like this. I'll just show you. Okay, the obstra is completely stuck. Obstra is completely stuck. Let's close this. Obstra is completely stuck. No worries. So basically, our upper break even and lower break even both will increase. I think upper break even will increase. So this will go till 23,500 upper break even. Okay, and then we can start selling heavily from here, because the market, if it does not go here, if it shows one rejection, then we can start selling heavily over here and come downwards. Okay, so that's the complete deal. Here India VIX is 12.05 and India VIX is falling badly. Okay, Opstra is not coming in live. So in case it comes in live, I'll let you know. For now, I'm sorry. For now, this is the adjustment. I'll make the adjustment over there on Opstra whenever it comes live. So that's it. You can check out the margins left. Now the margins left are very minimal. So this is not, now we cannot make much adjustments. Okay, we have deployed almost 100% now. So that's it for this. Welcome back. So we are still today on 2nd of April and it is 11:08 a.m. As I showed you, I have made this adjustment. So I have sold actually 400 lots here. So 400 quantity. So this is 8 lots, and I am updated the effective India VIX as well. Effective VIX for our strategy. Now, as you can see, we are extended up to 2 sigma, and this is 21,347 and 23,500. We have the range, but we have in between around 700 points of loss. So I'm expecting the market to fall outside of this range, and let's see how it goes. So I just wanted to show you this new kind of strategy, this new kind of payoff chart. So here we want to achieve 20,000, but so far actually we have incurred a loss of 500. So we have booked a loss of 500, but overall PNL is of 2,000 profit. So it is only 1.5k, and we are still on 2nd of April. So we still got 30 more days to go, approximately 18th April. So 18th April we have time till 18th April. So let's see how this thing decays. As you can see now, right now it's in 2,800. Okay, and in the next 6 days, okay, this did not travel. This is showing bad here. So again, this Opstra is showing some kind of problem. Okay, database is down. So no worries. Thank you so much for this video. Okay. So thank you so much for watching. We'll see you in next video whenever Opstra runs properly. Welcome back. So today is 3rd of April and it is 10:22 a.m. Okay, the market is still in the central zone and the VIX is falling badly. What we can do, we can actually increase our risk from here. Sorry. So I think I want to bring a couple of lots here, and I want to bring it to 22,000 something, because the market is positive here. Okay, we're showing some decent signs of rejection from here. Okay, and, because of this rejection, two-time rejection, I think 22,000 becomes a very strong support. So I'll bring it up to 22,000. So here we'll book this profits. Before 22,000, we'll just check the market depth, and here is the market depth. Here is the 11. Okay, the market depth is 11 and it is 49. So yes, we'll book this. We'll exit this. We'll only exit 200 lots, and that's it. And here we're gonna sell 200, and we'll see if this gets okay, this is sold. Yes, this is sold. So 200 quantity of 48.9, 200 quantity of 48.9, that will adjust here. So for 18th April 22,000, and this is the PE. We have to sell this for 4 lots. Okay, this is added, the position is added here. Okay, now the next thing that we have to do, we have to exit the positions from here. So this is 4 lot exited, so that's it. Now what has happened, now we have increased our risk position here. As you can see, the market falls down below 22,000, we're going to have some problems. Okay, okay, let's observe this again. 22,000 PE, 4 quantity. We more, if we get forward, let's just save this. Okay, so we have created some kind of a disbalance over here. The market falls down, we're gonna face a serious problem. I'm just checking the bot PE. So here is the bot PE. So this is the 500 quantity. So this bot PE is not going to provide us much support. Okay, we'll have to move this forward. Hence, what we'll do, we'll first book the 100. We'll do more 100 and check 22,000, and we have the PE we have to buy. Okay, buying this is beneficial. Let's see if booking this is beneficial. Yes, so again we are, then the range is quite manageable. Here it is 10,000. This central loss PNL, max loss is minus 2,000. Here max loss is minus 6,000. The market falls down, this is manageable. So what we will do, we will actually increase this. If the market falls down, the VIX will also increase, so we'll have time to manage. We'll exit 3 lots and we'll buy only 2 lots. Okay. So here, what we'll do, we'll exit and we'll exit 150. This sell rejected. What we'll have to do, we'll have to just go ahead and buy first, and 22,000 PE we'll have to buy. So here is the 22,000 PE. Clear this out. This is 77. So we have sold it approximately at 50. And here is the 200 lots. Here we have to just go and buy 100 lots. Okay. This is completed, and here we'll go ahead and exit 21,500 PE. Let's check the margins. Okay, let's check margins are decent, and 21,500 PE we can exit this. We just exit 200 and check how this turns out. Rejected. We cannot exit 200. Now we'll go and exit this at 150. Yes, it has complete. The margins are 15,000. $77.15. 77.15. So this is as complicated as it gets. 11.6 we'll put it. So here what we have done, we have tried to increase the range, and there are some profitable pockets. As you can see, there are pockets where it will be profitable, there are pockets will be in loss, but mostly in the positive side will be profitable. The negative side will probably be in some kind of a loss. But if the VIX goes up, so when the market falls down and the VIX increases, we'll still be profitable in the lower side as well. Okay, so that's it for this video. Let's wait and watch how the market reacts and then decide the path forward. Hello everyone, welcome back. So today is 4th of April, quite big and quite on the top, and then at the start only it started selling. So probably people who were afraid, they got chicken and they started selling here. Now what we can do over here on the upper end is that we can just bring one lot of CE downwards, because our CE is itself decaying. So what I've done, I have taken this order, okay, and 0.5, 0.3, I'm trying to book this, okay, and book this and just moving one lot higher, because we will actually tread cautiously over here. We have to tread cautiously, can't just go directly all in, straight away move in, because I don't know if the market will reverse, because the market opening so higher is actually some kind of bullish signs. Okay, something is happening here in the market. So the market went away, and their opening and day high probably broke the all-time high. Okay, so that's the power, the 22,619, and we are trying to book this, but it is not getting booked, and probably we'll have, okay, it is booked. Now I'll come to position. We have booked this 23,500. We'll add a position 23,000. See, this is, yes, it is complete. Let's check out the margins are decent. Okay, so book here and added here, so 7.46 and 33.39. okay, 7.46 we have reduced one lot. Okay, it is 800 quantity, and 23,000 C, here it is 33.39. okay, 39 we have increased one quantity. So this is now how the market is looking like, and the India VIX condition is 11.6, so that is fine. As you can see now, the overall range is reduced, but still the market doesn't fall like very drastically, after this break even. So it is falling like a tent shape, okay, double tent shape. Coming back to Greeks, we have some theta and we also have Vega, so both of them are positive. So here you can see in the next 3 days we will be positive. Okay, if the market goes higher, we'll definitely be positive, and if the IV goes higher, we'll be in positive, and if the IV goes down, we'll be in some kind of loss. So that's there. So it IV and this is like a calendar. IV is supporting us, and if IV increases, PNL will increase, and as the days go by, theta will decay a lot. So that's it so far for the adjustments. Now, as and when the market reacts, we'll see. So the IV has increased. The India VIX has increased only 2.18% only. Let's check where the market is. Yes, it's stabilizing again at this level. So this is like 22,500 has become a sticky level. So this is the level. So here near the all-time high. So let's it. See you next video. Right of April, 1:29 p.m. Okay, it's still on the same day, and the market is going up. So it started on 20,000, 22,600, and now it is going back up. What we can do here, we can exit this for another 100 quantity probably. Okay, and this goes at 6.8. Okay, this is gone, and we can add a 100 quantity over here. Let's check the 100 quantity and sell it. It's completed. The margins are 24,000. That's okay. And we have 300 and 350. Let's just check the order. We sold 22,000 PE. PE 350. So that is 7 lots of 22,000 PE, and the quantity there we have is 42.27. Modify this. Let's check the India VIX is 11.17. So India VIX is effectively reduced, and we have to reduce this quantity. 300 is like 6 lots. Okay, so 17.08, that is. Modify, save this strategy. Now what we have done over here is basically we have sent this far away. Okay, once the market falls down before 22,000, it will be difficult to manage, but then yes, not expecting it to fall down much, but still there, this pivot is still there. So if anything happens, we'll fall back to this pivot and we'll adjust this. So I have just kept the pivot open and not booked everything. Yeah, okay, there's no need to adjust anything now. This strategy is fine, working fine. Okay, let's just check if the Greeks. Okay, Greeks Vega has become slightly negative. So if the India VIX goes up, yes, the market still going positive. If when but India VIX goes up, so that is fine. It's only slightly negative. So I think that's it for today's adjustments. Now what we'll do, we'll actually bring our break-evens. We'll have a pseudo break-even in between. So that will be 22,215 and 21,936. So this is the pseudo break-even, 21,936 and 215. Okay, and today's break-even are this values. I think the market is doing good. So that's it for now, and let's see how this market travels, then we'll decide what to do next. Here we are on Tuesday, 9th of April. On 9th of April, we have at 10:18 a.m. market opened gap up, then it fell down, and then it again went up, tried to reach its opening, then again it's coming down slightly. And now when the market is here and when we are looking at our PNL, okay, and this thing has already come near 1 sigma movement. What this has already gone beyond 2 sigma, so we can actually bring this at near 2 sigma. So what we have to do, we have to exit this from here, okay, and we have to limit Let's see here. If you modify this and we put it for 7.3545, basically it will get triggered. Mostly it's not getting triggered. See, that's the problem with this 18th April. Market is not that liquid. Not sure why. Now 7.5 also. It's good. Okay, we'll go at 7.5. Orders are like buyers are more over here. We'll just modify this and we'll go for 7.55. Let's hope this gets triggered. Not getting triggered. 7.6, and this is done. Okay. Not sure why this gets slowed. Huh? This really gets slowed while triggering this order. Okay. It's completely booked. I think I'm charging the laptop from quite some time right now. So let me just remove that. Maybe it's got heated. Now let's check out the positions. Here we have opportunity to sell 300 lots. If I add 250, what is the margin consumption? Go for market and go for limit. Not even showing me the margins. Okay, it is completed. What are the margins left? 46,000 is left. So what we'll do, we'll book this. We'll put this 46,000 on the CE side. 23,500 CE. We'll add this thing over here. And if you see how many lots can we add, insufficient balance even for one single lot. And to sell this, rejected. So I think this was okay. 600 at 30. 600 at 30, and we can book this completely. 600 is basically 12 lots. 22,000 is 12 lots at 30 lots, and here is the 30. If I save the strategy now, effective VIX has actually come down. So this is the fall, but we also have to see we have some PEs bought in, and the 22,000 PE is the thing that is going to help us out. Okay, wait a second. 22,000 PE is the sold part, and the PE that is bought is around 21,500, and this is around 22,000 PE. So these two PEs are like not really giving us any value. Check out the Greeks, and Greek Vega is still positive, so we'll not move the PEs. We'll just check the payoff chart, and if we increase the volatility, central it is 20 to 2,500. If we position IV increases, okay, VIX our strategy is still increasing, and if the IV decreases, strategy doesn't go down that much, so that's fine. And let's check the futures chart again, and yeah, Greek chart. So we theta is quite high, 4,200. That's good. Let's see how is the decay in next like 3 days, 5 days, 4 days. So on the positive side, we will actually have quite a lot of benefits. So this is Tuesday. Okay, Tuesday, Wednesday, Thursday, Friday, Saturday, 5 days, and Sunday is the 6th day. So if we open on next Monday, and if we are somewhere around 23,000, we will still be on 13,000 profit. That is decent. What we can do is probably exit some 21,500 PE from here, and I think what we can do, we can add here. Okay, we can add this 200. So 350 quantity we are exiting, and we are adding 350, 3,500. Then we just have to add 100 quantity over here, and I'm gonna buy this. We have exited here 22,000 PE. We have to buy and we have to sell. So this is the bought quantity. Now that is running at 29.15. Okay, that is again running at 5. Let's go with 5. It's triggered. What we'll do, we'll completely exit this. Okay, don't need this. Exit it and we'll go. It's rejected. Check the margin. 83,000 is there. Positions. Let's go here again. And what we'll do, we'll exit this at maybe 250 quantity. We'll exit it. Let's see. Still rejecting it. What's the point here? Exit this. 50 quantity will be exited only. We will just sell this 150. 1.7. 10.6. Okay, margins are 48. We have 200 quantity for hedges, 28 and 53. Hedges are 28 and 53, 200 quantity, that means 4, 28, 45, and the hedge is 53, 45. So here is the deal. So on the negative side, the markets turn back, we'll get good profit here. Oh, we'll still get some 30,000 profit here, and from the positive side also 30,000. For now the PNL is plus 6,000. Okay, let's save this. Let's see how the market moves. For now we'll just mark our exit points here: 21, 928, 23 equal to 7, 921, 920. So we haven't changed our thing much. Okay, the break-evens are quite far away, and that is decent. The overall trend is upwards, but we cannot know what will happen next week. No, it might come down. Overall trend is upward, so here you can see the overall trend is upward, but here if it turns back, then again it will come in center. So that's it for this video. Thank you so much. I hope you guys have understood the adjustments. On 9th of April, so it is the same day. Okay, 9th of April, and we are at 3:23 p.m. 3:23 p.m. I'll just show you. Market opened, gap up, and then it came back down. It is showing some signs of rejection. I'm sorry, it's showing some sign of rejections. Now what we have here, basically this peak, second peak has gone beyond 2 sigma, and I think we can reduce this and bring this inside second peak. So what we'll do, we'll basically exit this, okay, and we'll bring it to 23,400. So that will be the level, 23,400 CE, and 18th April 23,000 CE. Let's see the value what we have over here. So 23,400 CE also of rupees 5, 23,000. Basically what we'll do, first we'll go ahead and exit this, and we'll make the above quantity 500. Okay, so we'll exit this at 3.45. we buy this, good. We check out the margins. Okay, this is exited. We'll make this as a, we'll just see if we can add 250 quantity over here, 250, and we sell it. Yes, it is open. Modify. Okay, no need for modification. It is executed perfectly. 41,000 is the margin. 23,400 was not required, so we can just remove this. So we have 23,036.33. 23,000 is 36.33, 6.33, and again this is 12 lots. We have saved the strategy. The overall India VIX has reduced, but that's fine. we have to kill this call cell of 23,500. 23,500 call cell. We have to kill this. Here we have killed the 23,500 call cell, and this is the new strategy. Now there will be some problems, like if you check the futures chart and you check the Greeks, and Vega has become negative. Let's check some more items over here. Vega has become negative, and we need to make the Vega as positive over here. So the 23,500 buy we have to exit, and we have to add the 23,000 C over here. So we go ahead and add this, and let's just first cancel it. PE side, on PE side we have 400 lots, so here we will add the 150 lot. Okay, and we just go ahead and buy this at 91. So 23,000 is executed at 91. You check out the margins. Okay, now let's exit this 23,500. We can exit this, and we can do yes, that is also exited. Now check the margins, is 56,000. 23,000 is 400 buy at 73.41. So 73.41 is the buy. Okay, 73.41, 23,000 CE. Okay, and 448 lots, 73.41, and we can modify this. Now as you can see, if we go the upper end, the market will increase, and we can directly reduce the 23,500 quantity. Sorry for the disturbance. So this is the adjustment so far. So if the market goes up, we will get positive returns. If the market goes down, we'll still get positive returns, but the positiveness will be lower. Let's check out the futures chart and the Greek chart. Now you can see that we are Vega positive, and the benefit of Vega positive is that if we increase the IV, our profit goes up. So here we have actually reduced from quadruple diagonal spread to a double diagonal spread, and we have to consolidate this PE values downstairs. But because markets are positive, I am not consolidating it downstairs. I am letting this be a split leg. Okay. And because this CE is negative, that's why I have added the CE over here from the positive side. So that's it for this video. Let's see how we can be profitable. First, let's check this 21,940. So from the lower end, actually we have brought it up to 21,940, and from the upper end we have reduced the range to 23,149. Okay, so this is the range, because we will actually face quite some challenge at 23,000 region. Okay, so that is the challenge. Let's check out here first. Just hold on. Let's check out. We have saved this strategy. Okay, we just reload this. Okay, and now if we move the cursor forward of days passed by, after 4-5 days, you can see the positive end will still show some quite of positive returns, and that is the reason why we have let this go in the positive direction. Okay, so that's it for this video. Thank you so much. April Wednesday, and this is 9:37 a.m. At 9:37 a.m. we can see the market has opened quite in between the yesterday's opening and closing, and if it makes an inside candle today, it would be amazing. Now let's look at our strategy. Basically what has happened, this thing is going at the upper end. It might reach this peak, and the lower end peak is suddenly trying to reach beyond the 2 sigma. Okay, so what we can do, we can probably increase the risk factor over here, but for increasing the risk factor, what I see, then margins don't permit us. Okay, the margins are only 57,000 and they don't permit us. So somehow we will have to spread this 22,000 into 22,200. 22,000. We have to move forward. Okay, 200. We'll go for PE, Nifty PE of 18th April. I'm just added it over here. Okay, India VIX is falling badly, and we will have to move this 21,500 to 22,000 here. Okay, so we'll go ahead and buy this. We'll add for 22,000. We'll have to add 200. and India VIX has fallen, so we'll get a good price. Suddenly VIX rises, then it's gonna be a problem. 23,500 we have exited completely. 21,500 we are soon going to exit. 22,000 PE of 25th April. Here we are trying to buy this, and we have to buy this at 27.3. Okay, 2, 3. Let's check 3. 7.3, probably. Yes, it has been executed. And now what we have to do, we have to exit this 21,500 P. So this is the 21,500 P. We have to take this, exit this completely, limit 9, sell. Let's see what are the values. Here, not the values right here. Value. Okay, that is exited. We don't have to worry now. What we are going to do next is basically we check the positions, and now we check the margins. The margins have increased quite a bit. So here what we can do is probably increase our risk factor and go to 22,200 PE. Okay, so 22,200. We will also check option chain. So this is the sensible option chain. Let's see. We go for the expiry of 25th April. Let's see if what's the expiry. I see 21,500, 22,500, and then directly at 22,000. Okay, 18th April, and 18th April don't have much of an OI, but for 25th April we have definitely good OI at 22,500, and then also for PE OI is set at 22,500, but for lower end it's nothing is there. CE is not there for upper end. That gives us confidence that there will be some kind of holding back at 22,500, so we can come to 22,200. Okay, so 22,200 PE. So this we have added, no? Okay, let's clear this up. Okay, this PE is of 22,200. What we can do, we can actually exit our position of from this. We can exit this, and 9.2. Let's see if this gets triggered. Okay, PE. Check the market depth. We're checking the market depth over here, and 9.2 it's not getting triggered, so we go for 9.35, and hopefully it should get triggered. Yes, and now we go ahead and sell our, we will try with 700 quantity, and we will sell it rejected. Try with 600 quantity, and we sell it off. Yes, and we are the best sellers. Yes, margins 56,000. Amazing. So 22,000 PE is of 440. So 400, that means 8 lots, and 40 is the price. And 21,500 PE we can exit this, and 22,000 PE can go to 22,200 PE, and that is at 18.3. 200 PE at 18.3. We modify it. You also need to know the India VIX. The effective India VIX has reduced drastically. It's come to 3 now. Now let's see the VIX. We're still Vega positive, and that is amazing. So when the market comes down and the VIX goes up, we'll have the central region in this range. Positive 20,000 is still there. This peak is of 16,000, and the forward peak is of 43,000. Good. So our strategies are quite set, and this is good booking. Let's check the backend report and reports. We check the tax P&L. So with this financial year, we can check the tax P&L directly to check the profit so far. Here we can see total realized profit is 2,700. So approximately 18k we have to earn more from this strategy. So here even in this peak, there is some 15k, 16k, 18k seems possible. So that's it for now. Thank you so much for this part. Of April, we had a holiday on the Thursday expiring, and it was Eid. So Eid Mubarak to everyone. Now on Friday, this is 12th of April, 12:47 p.m. As you can see, it's 12:47 p.m. Let's check out the market. The market, which closed like flattish on Wednesday, basically opened almost at the same level, slightly lower, and then started cracking down. So there are some negative cues in the market. That is because of some global negative news, but overall the market was quite flattish again in the US. So there won't be much movement yet. Our days MTM is quite in loss, and what we need to do, we need to adjust the strategy because this India VIX is falling down, and because of that fall, our overall strategy is in loss. Let's check out the margins. Margins are decent. What we can do over here is basically we can adjust this 22,900 CE, okay, on 18th of April. So we will exit this completely and shift it to 22,900. We can exit this and limit 12.7 is the limit. Let's check. Okay, executed. Let's sell this 600 lots, 600 quantity. Market limit, and let's sell this. Okay, well, that's completed. And we have 600 of Nifty, 22,924.25 into 900, 4.25, 12 lots. Again, now India VIX says 11.4, so we have to see the strategy. 11.35, we can do something like this. Okay. So despite India VIX rising, our overall strategy is not rising. Let's check the IV. I'm not sure how much the IV needs to rise, 10-15%. So for now, we are getting a loss in the central zone, but it's not much of an issue. The market will definitely move from these regions, and we will see some action here. What we can do for now is basically we can just go ahead and 23,000. We can just go ahead and buy this again. 23,000 and 22,000. You can just add this because the market has fallen down. We are buying this. Okay, margins, positions, and we're just again buying this at 100 quantity, and we buy this. Okay, margin left us quite a lot, and 38.69 and 69.23. 69.23, and this is 38.69. Modify this, yes, strategy saved. What we can do is basically bring this thing inwards, or maybe just same levels. We increase this. We add over here the sell quantity, sell side, and rejected. Margins are insufficient. Positions check again. Maybe add 50 lots. Limit sell, yes. And positions we can add here. Add 50 quantity, limit sell. Margin check. Okay, 51,000, decent margins. Orders check, yes. Positions executed. So 650 is 30, 18.37, 24.2, 4.2 is 13. So here is a modification, and then we have 18.37, Here is the value for 18.37. We modify this, we save the strategy. Okay. Now in the center we have max loss of 13k. We have booked here around 14k. So this overall is the max loss almost, and we have a tax PNL of 11k. So we may complete like 1% of the target if it remains in the center, but if it swings somewhere here or there, then definitely we will incur some good decent amount of profits. So 22,200 and 23,000, whereas the levels 22,000. Let's put this level 20,000, 22,995. 22,995. So that's the 22,995. 995. Okay. We'll place this here, and we have the 21,184. 21,184. Okay. Sorry. 22,184. So we have plotted this at proper place. And the central loss zone is basically 22, 270, 22, 745. So this loss zone, we will probably put another markers for them if we will have the markers. It was this loss zone or near 18th April. This will be the zone. Okay. Short position, long position, projection, and we have this pivot retracement and all those things. Let's check this short position. And this is the RNR. Not an issue. Looking for something else. Yes, regression trend or a parallel channel. Looking for a parallel channel. The channel 22 270, 22 745. So 22 745. One day we will start the parallel channel. Hmm. 745. Okay. So here is the channel, and 270, 270, 270. Yes. So here is this loss making channel. Basically, if we want, we can color it red. If the market remains in this channel and expires in this channel, we will incur some losses. Okay, then we just expand this. Okay. This channel we will have the loss, but if it is not expiring in the channel, expiring anywhere outside, we will gain some profits. So this is 18th April. So 18th April, this is looks likely it will expire in the channel. But no worries, we will try to extract some more profits also from the sides. We will try to come in closer. Okay, we'll try to do that. We'll try to come in closer from the upper end. If so, if the Monday market goes down, from the upper end we will lose it completely, and we will probably come in closer at 22. This week 22,700, 22,750 or 700. We will come around that level. So half of it we will lose it and come to 22,700. Okay. So that's exactly the Monday adjustments will be. For now, this is the safe strategy. So we just need to end at these levels somehow. We'll figure this out. We'll figure this out. Okay. So that's it for this video. Thank you so much. And this is 18th of April. From the last three trading days, the market was getting battered, and then Wednesday was holiday. I did not get to record this, but yes, the battering was very severe, and I was in office for the last 3 days, and it was very bad for all the 3 days. So until this first day, we were okay, but when this second day happened, we incurred some losses, and this third day fall, we incurred more losses. And today, it was supposed to go down further, but right now, pre-market opening is showing good, but I don't know how much is this sustainable. Let's check out the sensible option chain. So this is the sensible option chain. Here you can check out. Just reduce the brightness a little. For 18th April, the market is not gonna go above 22,500 never, and in the lower side there isn't much support yet. We have sold something heavily on 21,500. Let's see where the market goes today. Okay, so the market opened positive and it is going up. Now what adjustments do we do? So here we are getting some negative values. Yes, the market is inside and we are getting some negative values here, whereas we have some margins left over. What we can do, we can completely book this, okay, and make this exit, and we can come to 22,000 directly, modify. Okay, this is exited, and check the market depth. We go ahead and sell this 500 quantity, 5.85 sell, not getting executed, modify 5.5, modify, okay, modify further, modify 5.1, okay, modify, take it at 5, okay, modify, let's trigger this. Yes, it is triggered. Cool. We got 5 rupees, 500 lots. Here are the margins. So this is not for speed trading. Basically, the speed trading is like very poor on this terminal, especially during this 9:15. We have 22,500, 22,000 PE. We sold for 5 rupees. We can come here, okay, and we can change this to 22,000 PE. 22,000 PE, and that is we have sold 10 lots rupees 5. So we'll modify this. Okay, so this is the strategy. Right now VIX, India VIX is same as 12.4, not a big deal. Now here we can see if the market goes up, we'll get some profit, but if the market goes down, we will incur some losses. Okay, so around 4,000 will be the loss, but if it goes up, basically we can reduce a lot. We can reduce some losses quite a lot. So let's check out the margins left over. We still have 1 lakh margin left, and I think I can do with additional probably insufficient balance. Okay, let it go. So the CE side we have this 22,500, which is decent, and okay, so PE side we will just change this. Okay, so PE and CE are sorted off 18th April, but this PE is now falling. Okay, 22,000 PE is now falling, and let's check out the market is showing slightly positive signs. Can we exit this for 100 quantity? Will the market reject this? Yes. So what can we do here? What if we exit this for 1 quantity only, 50 quantity only? what will happen then? Yes, it can be exited. Just want to modify, and yes, it is exited. No need to modify. And the margin list is 27,000. Now on the C side, this PE is actually the culprit. Basically, it was giving us the losses. Okay, when you go towards the CE side, this PE actually starts falling. Okay, because of the delta move, and this is the culprit which gives us the losses. I think we can reduce this CE further or E further, or we can actually bring this 22,000 PE inside. Okay, we can do a lot, but for now, let this be the current state. Okay, let's just check the PNL for now. We check out the reports and we check out the tax PNL. We check out the FNO, the running profit and loss. Yes, so we have the options realized profit as minus 8,000. So that's really very bad. So we have already realized in 8,000, and here we'll realize another maybe 12,000. So, and in fact, instead of earning 20,000, we will actually lose 20,000. So that is really challenging and really very bad. Okay, unfortunately, that's how it is. So today is 18th April. Today is the expiry, but we will have one more week too, and then we will change that. Okay, we will keep these hedges alive, and see what strategies can we make by end of the day. We'll observe that. Maybe we'll book this and try to go for the first week of next month, or maybe the completely next month, because I don't think this terminal is good for speed trading. Monthly is decent. Let's go for the monthly strategy only over here. And I'm not sure about the VIX. India VIX starts falling again today. So VIX is not really. Uh, India, see, Vega is quite positive. So if VIX falls, the strategy will give more losses. And today's premium is not that much. So here there is 2 rupees, and here there is 4 rupees. So what we will get out of this? Nothing. Almost nothing. So let's check if the prices are perfect. So 517, 69, 48, 517, 16, 48. That is fine. Okay, so I think overall 20k will be the losses, and for the last week we'll see. We'll probably do something. And last week the premiums, as you can see, 23,000 premium for 25th April also is not enough. So that's there. Okay, for now let's live with this. Can't do much. Market went haywire. Here I had seen that on 22,000 also there was this 100 plus OI in lakhs, so 100 lakhs plus OI. But 22,000 OI has changed, and now 22,200 there is 100 lakh plus OI. So I don't know what people are doing here. Will they book losses? Do they book profits, or what not? I don't understand really. And so the option chain is really a bad indicator. No, I think we should not look at the option chain. Should look at the price movement and the markets, the overall sentiment, and then decide path forward. So for now, I think this is the adjustment. Okay, and I'll see for the second half. If the first half the market goes here, it will give the 20,000 loss. Okay, right now the running PNL is 20,000 only. Okay, at max I can lose 20,000 only. So I think we should leave the strategy for day end and then decide the next steps. Thank you so much. Till Thursday, still falling down, and I think it will fall down and go to 21,800. What we will do, we'll put some strategy, that is a ratio spread. Okay, so if the market falls down further, we will get some benefit, and that is exactly, or we will put zero loss here, and if the market goes up, we'll get some benefit. Huh? We will do something like that. Here you can see the VIX has increased too much. So what we'll do, we do not know where will be the bottom. Okay, the kind of fall this is. The bottom, I'm not really sure where it is, so I'm afraid I'll put a reverse ratio trade. So here I was gonna buy PE, but instead I think I will go ahead and buy CE and sell CE. Put a call ratio spread. CE is here. We do the modification, and we'll start selling this 23,000. 23,000 CE will sell. So here is the strategy. So 22,800 is fine, I think. 22,800 CE if we sell. So that's the strategy. 23,000 something we can exit. And what we need to do is we have to buy 22,000 and let's see what we are getting. Bottom, I think bottom we can actually just go ahead and 20,500 PE we can sell to subsidize a little bit, 3 rupees. This is 10 lakhs. I think we can go just upward of 22,200, and yes, right now. So if the market goes down, then we will incur no loss. 20,500 we are selling. Let's check where is 20,500. It's around this levels. 2,500 is at this level. So 20,500 is here, somewhere around here. What we are seeing is by end of April the market will be here. Okay, so here 25th of April. So this unlikely, but yes, this is where I have put the PE. So what we can do here is basically we can take CE upward 22,300. Okay, so now it is like 1,000 profit. This we can do. Okay, now 22,300 the CE will go ahead and buy. Control A, 22,300 CE. There is the CE, we clear it off. 22,300 CE. So we want only 25th April values. Here 22,000. We'll delete this. Okay, the PE of 20,500 is the PE. 20,500 is here. We clear this off. This is the CE and 23. The CE of 22,800. So here we go, 22,800 CE. So here is the CE. The margins are 10 lakhs. You see the split. Holdings collateral is 7.2. Okay. So let's just go ahead and buy this CE at first. What we can do is basically we can add one lot of CE here. So 10,58,000 is the margin. I don't think this will be good. You can go to 22,400. Modify. The margin will increase further. Ultimately, we'll have to bring this PE down. It won't add much value. So let's go for 22,300 only, and I'm just going ahead and buying this. Okay, this is one lot. I limit buy, executed. I just go ahead and do this 11 lots. Let's see if I can execute at 11 lots. So I'll just go ahead and sell this at 6 EB550 and limit sell executed is margin left is I just go ahead and sell 500 lots. Is it getting sold? I rejected, so I can sell 400 lots margins, and I check this. I go for 400 lots and I sell it. Okay, it's not allowing me 400 lots. It will allow me 300 lots. Okay, some problem here. It's not allowing me. It's rejecting even that. 100 lots. Okay, it's not allowing anything. It's rejecting all the orders here, and I don't know why. What if I go and sell at 20,000 and PE? That is also at 2 rupees. And if I sell this 100 quantity, that is rejected. Available margin shortfall 16,000. Okay, I think all will be shortfall only. No point of adding this. 20,500 PE, we'll just put it in the radar. So 64 and 4.95. Yes, India VIX is like 12.9. I think we'll have to reload this. Opstra is stuck. Goes Opstra and OPSTRA. Opstra. Will just open Opstra again. In this portfolio, strategy builder. Okay. We put in options. In this options, what we have done, we have bought it for 22,300, 20,300, control A, 20,300. CE is being bought and 22,800 CE has been sold. That is 11 lots. Some problem with that again. 64.75 and 4.95. And here if we go and check this 2,800 and this is CE, we sell 0.95 and we modify this and this is 12.9 VIX YouTube strategy. Okay, this is the call ratio. Let's save this. I'll tell you the adjustments what I will make. So as and when the market goes down and it probably moves beyond 1 sigma movement, I can if this goes beyond 2 sigma, basically I can just keep bringing it to 2 sigma. That's it. That's the only adjustment. And at the lower end, I could have sold something here, but then the market is not allowing me, or maybe I start selling from lower end if the market goes down. Okay. So that's the overall adjustment. And here you can see how bad the market is. Okay, that's it for now. As you can see, this is 9:29 a.m. and we are on Friday, 19th of April. Let's show you the daily chart. See, we started falling. Okay, 1, 2, 3, 4, 5. Okay, the fifth day of fall, and the market is going down very fast. And I think the way it rose up fast from here, that's how it is going down fast, and it may come down to 20,000. So what we'll do, we'll start selling PE of 20,000 only, and here whatever the market is allowing us, we'll sell 100 lots. Okay, let's sell 500 lots of PE. Sell. It's rejected. I sell 300 lots of PE. Okay, it's completed. The margin left is 9,000. Okay, 20,000 PE options 20000, and this is PE. We have already sold this and we have 6 slots, and the value is 4.1 for us. We at this position, and here the India VIX has gone to 14. So our overall India VIX will be around 13.4, somewhat like this. Okay. Now if the market reverses, we'll still be in profit, and if the market goes down, we'll still get some 700 rupees, and we are in overall 19,000 loss. So that is a really bad thing. Let's check back again when the market makes a little bit more move. So that's it for today. Just the market is still going down, so this is flattish and then it's turning back, and we are still sitting on the Friday 19th of April. So I've made a couple of adjustments here. I'll just let you know while adjusting it. So here we just go ahead and the buy option, we go to 22,500, and that is around 11. So we take one buy at 11, and we exit this one quantity. So the overall India VIX is now 13.9. It doesn't affect much. Okay, so this is fine. Now I can see that 3000 will be the PNL over here, but we have already booked like 1.8k loss. Now we have 88,000 of this. Uh, Here what we can do, we can go ahead at 22,700 CE, we can start selling. And if I go for this, already selected here. Now the value is 4.3. I just go ahead and sell this one lot. It's getting rejected, so maybe it will get released tomorrow. So I'll sell tomorrow. What we can do for now, basically we can go with this. We can add this. Okay, let's try with 100 quantity. Yes, this is complete. Now check out the margins. 41,000. That's fine. So 4.06. We'll just increase this to quantity. Just modify and we save it. Okay, so this is how the strategy looks like. The market reverses, will get a peak profit of around 17,000, but if it does not, still going down, we'll still get around 3,500, but we have already lost 18k. So almost 21k we have lost, but yeah, we'll redeem some part of it and come to probably minus 18k of loss. Again, it's a bad start of April. To think a lot about strategies going forward with the rising VIX and all. What happened with the India VIX today? It rose further actually. So maybe VIX will keep on rising further. Maybe not sure. For now, the margins are 41 positions. Here holdings, and you know already my holdings are there in Asian Paints and FTVs. Asian Paints same old negative 20k, and FTVs is positive. So that's it for now. Let's catch up in next update. Thank you. Is basically 24th of April, Wednesday. Okay, and we are at 9:50 a.m. as you can see. And the last week market got battered quite badly, and we incurred losses, 20k losses. And now the market is going up, but it's not that fast. Yes, but it has recovered this day's loss, and then this day's loss, and then this the 3 days loss. It has recovered in 2 days, and now today the market is quite flattish, and this is Wednesday. Tomorrow will be expiry. What we're trying to do, we're trying to just sell some lots of PE over here. Okay, so we are selling 20,500 ka PE. We just reload this. 21,500 PE will come somewhere around here. That's what we are selling. and it is of 1.8 rupees to 1.8. We will just sell this. Yes, so margins are okay. Let me see if we can add this at 1.75. The margins are shortfall. Okay, so minus 21,500 is here. PE, we sold it at 1.8. We have 8 lots. I think I could have gone 10 lots over here. The overall India VIX is now coming down. It's around 11 only for us. If the market goes up, we are good. If the market goes down, we don't have much losses. As you can see, we had bought this in 11 rupees. It is still 47. And now what I feel is that we can book this, and I don't think the market will go to 21,800. But I am never really 100% sure. Okay, never really 100% sure. It's just 11 rupees, and I'm getting 2,000 out of here already. Very tough decision, basically. It's a very tough decision. Okay, but I see that there is a slight hope, a hope that the market will rise up. Okay, this is just a hope. So based on this hope, we'll just keep it live. 22,500 call option, we'll keep it live, and let's see how the market reacts. For now, we have incurred around 19.5k of losses. 19.2k is the running losses. Probably will go. We will be gaining some 2-3,000 here. So maybe if we'll be lucky if we can close it with like minus 15,000. It's a bad start for the year, financial year, but let's see how we fare in the next coming months. So that's it for this video. Thank you. So today is Thursday, 25th of April. This is 9:34 a.m. I show you the market opened a slightly bit gap down, and then it has started going up again. What I did, I had to book a strategy basically at 2000, approximately 2000 profit, but overall we are at 19.5k loss, but still we have 5 more days. And what I am doing, I'm thinking of a new strategy right now, which is a double diagonal calendar spread for the week. And this is how it goes. Basically, it's a double diagonal calendar spread at 21,800 PE and 22,800 CE for 2nd of May versus 30th of May. And then in order to bridge the gap, the in between loss, we are selling 6 lots of 21,500 PE and 23,000 CE. So let's just quickly execute this strategy. Here is the CE. We start from selling this. 6 lots is 300 quantity. Here we sell it. Here again we sell it. Okay, both of this we have sold. Again, now we have to buy this 30th of March. We have to buy only one lot, and here we go ahead and buy this one lot. So this one is not triggered. 172 it will get triggered. What's the issue? Price has jumped to 174. Okay, it's triggered. Now again we have to sell this one quantity of CE and PE here. Okay, here we have sell this, here we have sell this. Now let's check the margin. So 2 lakhs are remaining. Again 7.5 lakhs were gonna consume here. We will keep that for adjustments. Now we'll adjust the price. We got 5.75 and 6.10. Modify, and the 6.1. Okay, let's modify this. Now the next step is basically 174 and 111. So this one we got at 111, and that one we got at 174. So this is at a higher price. 19.7 and 14, and here we have 14 is fixed. Okay, and that one we got at 19.7. 7, modify, check it again. CE is at 19.7, so our CE is at 19.7. This one is at 14, and the CE is at 19.7. Modify this. and we save this strategy. Now you see central region we have around 2000 rupees profit. Yes, the Greeks Vega is slightly positive. That is okay. Basically now I'll show you. If the IV increases, so our region will get more and more positive. Okay, but it decreases, then we will be in a soup. Hmm. What we can do, we can probably go another few lots on the outer edge. So here, if I can get 400 maybe, but it has started already decaying, and if I can get added here, okay, margins are 44,000, and if I can add it over here, limit rejected. Okay, we will not add here, we'll keep it at CE only. So 6.22 we are getting at CE. 6.22 we have adjusted this, and modification done. Save the strategy. India VIX 10.39, 10.4. Okay, so that's our India VIX. Let's check the central region. Here we have around 3,000 rupees profit. Okay, so even if we get 3,000 well, on a week, we'll get like 3 4 that 12, only 12,000. Okay, our profit target is 20,000, and we have to do some recovery from last month as well. It looks very difficult, but we just have to see how it goes, because we already incurred the loss in the 25th April expiry. We are on a reduced risk segment. So let's see how this goes. So that's it for this video. Thank you so much. Bye. Hello guys, welcome back to Capital Investment. So we are here sitting on 30th of April, Tuesday, and this is the last day, and this is 3:13 p.m. So we have already closed our last strategy, which was a kind of a flat man kind of a strategy, and now we are adjusting the June strategy. Here, this June strategy will have one base strategy, and then there will be a reference trades. Okay, so here's 25,000 sell of CE. This is 35.5, and let's see. Okay, this is executed. Now let's come to margins. Margins are plenty. So this is our reference trade where we have bought this 23,000 and we have sold 24 and 25,000 CE. So these are our three basic reference trades. What these are our three basic trades. Now what we have to do, we have just have to recover this loss of 6,000 until June. Okay, and the market goes up, we will have to book this. So this will give us a profit of around say 18k, but we will have to book some kind of profits in between. So this is the strategy, and right now with the values that we got as 482, 151 and 35. So here we go, 482, 482, modify 151 and 35. So I've adjusted this. Now let me check the India VIX is 12.89. So let's check the base June. 12.89 VIX. So this was my base strategy. Okay, now this is my base strategy. Now what we'll do, we'll just duplicate this. We'll go to the portfolio. We'll have to duplicate this. Okay, this is not getting duplicated. So this is my base. Now we'll create a reference strategy. Okay, we will create a reference strategy. So this is my base, and we'll have to create a reference. Again, we go to analyze trade. Okay, now in the reference trade, what we'll do, we'll actually start selling beyond 2 sigma in the weekly. Okay, here we'll go builder, and we go for options, and we go for non-directional. Non-directional, we directly go ahead and start selling the jade lizard. So we'll do the jade lizard in the weekly. Okay, so here is the strategy. If the market goes down, we'll get good profit. So May 9th we'll do jade lizard, Here we'll go ahead and buy an PE. Basically, we'll buy a PE. So here we'll start going ahead and buying it from this value. If the market is going down, we should get some profits. Okay, so 22,000 we'll buy. If the market goes beyond 22,000, we'll incur profits, or else we'll not incur any loss. So we'll go for 22,000. Okay, here we go, and we go ahead and buy the PE, and we go for 8. Here we go for one quantity, and then we go ahead and sell this 21,800. Okay, 21,800 PE. We sell it, and then we go ahead and sell this 21,500 PE. PE. We have to sell this again one lot. Okay. Now here you can see there is almost no profit, no loss at this level, and the market goes down. It already incurs some profit. So this is the reference trade. To increase the lot size, here I can go for 10 lots. Modify, and then I'll have to go for 10 lots. So this obsta becomes really slow at this point of time. The market had some volatility. And then I go ahead here and do the 10 lots. Now you see this is how it looks like. The premium is 4 lakh something. So what we can do here at the CE side, here we can sell it. Okay. So now you see that when the market will go up, actually we'll start getting some profit until 23,700 or so levels. So 23,700 is a decent level where we will get some profits from here. 600. So we'll go ahead and sell at 23,500 level. Okay, so 23,500, control A, 23,500. Here goes my CE, and we go ahead and sell this. Okay, so this will be 10 lots, and this is the add position. Now you see this PNL of 3 plus 0 is completely flat almost. Here we are consuming 6 lakhs, so what we can do, we can actually add more quantity over here. 21,500 P, maybe we can start selling some 20 lots. We can sell this, and let's check this out. Okay, now let's start put down this reference trade here. 22 PE. Okay, 22,000 PE, the reference trade here. 21,500 PE, the reference trade 9 June. Okay, and then we go ahead with 21,800 PE. This is here. So these three are already put, and now 23,500 CE. 23,500 CE. So there is an FTCE 23,500. Okay. Now we clear this off, and we put this reference trade. Here we go ahead and buy this PE. Buying it 250. So lot size has changed, so we go ahead and buy this. Executed. Now let's go ahead and sell this 250. Modify 0.4. Triggered 9 lakhs is the margin. Orders. Okay, let's just go ahead and place this order as well. 250, 5.7. Let's sell this, and this is not getting triggered. Place it 5.65, and let's see. Now let's sell this again 10 lots. Are triggered. Now let's check the margins. So 3 lakhs is spending margin here. Okay, so in this 3 lakhs we have to double this quantity here. We go ahead and place this 20 lots, sell it. Okay, 50 we sell this over here. Check out the margins. These are decent, and what we do, I'll go for orders, modify it, 5.65, so it's not executed. Check out the positions and let's check out the margins. Okay, now first we'll adjust this 20 lots order, 5.65 and then 2.6. You know, offshore will keep on hanging again and again because of this increased volatility over here. You can see the chart now, market is going down. We booked it too sooner. We could have got 100 rupees profit more, but then could have also lost something, so it's better to get out. It's like a river. If you try to take the maximum profit, sometimes you may incur a loss, so it's better to exit it, because after this point anything could have happened. The market could have gone up, could have come down, anything could have happened. This reference trade has actually stuck up. I'll adjust this and maybe I'll show you tomorrow with the PNL. Okay, so that's it for this video for now. Thank you so much. So in today's market hours I could not do much of a recording. Okay, and we're already sitting on 2nd of May, and this is the end of the market, and right now it is way past 10 p.m. It's 10:27 p.m. and as you can see on Wednesday there was kind of a downward injection, and then Wednesday, no, I'm sorry, on Tuesday, as you can see, first 30th of April, Tuesday, it was a downward injection. The 1st of May, that was a holiday due to Maharashtra Day, and 2nd of May, Thursday, is expiry, and expiry went quite flattish. Okay, extremely lackluster expiry. Now what it says for our positions, now we have already squared up the position on Tuesday, and we had put two trades, that is this main trade of June, and this is the reference trade. Okay, so this reference trade is giving some kind of a loss. What we'll do, we'll have to come forward. If the market is still decent tomorrow, we'll have to come forward. One strike prices or two strike prices, we will see how much to come forward, that we will decide later. Margins left at 28,000, and if you want to check the holdings are decent, so both of my holdings are up now. The complete up average is 12.61, and the overall net change is 2.6% of Asian Paints and 27% FTVs. Now let's go to the PNL. PNL is basically, I have already recorded the PNL. Reports, and we go for tax PNL because it's actually the start of the month, so we'll go for the tax PNL. The tax PNL again shows around minus 11,000. Options realized profit, we need to need total realized profit 11,461. So this is a YouTube PNL strategy, and here we had seen that we scrapped through shortfall surplus. We had a shortfall of minus 1 lakh between September to March period earlier, and right now and then we attained a profit of 39,000. Okay, so that's fine. Now we'll just let this thing go. Okay, we'll put some new strategy here, and we'll let this thing go. We'll start with the April month, and this is 2024 first. 2024-25. Okay, -25. So this is the strategy, and now we start from April, the financial year. Margin available, again we will go for the 10 lakhs only. Okay, with the 10 lakh benefit. Profit is minus 11,461. That is the recorded profit, and some Sum of this. Okay, just wait, I will just put the month April, May, June. Okay, so this is how it will go. July, August, September, October, November, December, January, February, March, April. Okay, so this is how it will be, and the profit is sum of D3 to D15. So here we are setting this up, and below this we do not need anything, so we'll just delete it. And right side also, beyond M we don't delete need, so we'll just delete this. Okay, so our focus is mainly here. PNL is D2 by C2, so that is the average the running PNL of overall year. So currently it's we are in loss. Expected PNL. So what is the expected PNL? So here expected PNL and expected profit. So expected profit, again we want to achieve like 2%. Okay, so this is the 2% per month. That is the expected profit is equal to this into this 2%. So that is the 20,000, and we just go ahead and drag it. Okay, and summation is here. We take this summation and we take this summation. Okay, so something is wrong. April to April is wrong. April to March is the correct thing. It will be 24. So 24% is our expected profit, and based on that we are on a shortfall. The shortfall or surplus is this thing. We are from the target. We now have to achieve 2,51,000 is the target that we need to achieve for now. Okay. What we'll do, we'll remove this. So for now, 31,000 is the shortfall. That's what it's showing. And the PNL also basically, you need the sum of the PNL, so that's fine. Sum is fine. And right now the PNL is equal to this divided by this, so that will give us the profit and loss. The formatting is not proper. Format will take from here. We'll give one, and we'll give some. Okay, two decimals. We'll keep it for two decimals. So 1.15% loss. This is what we are running in. So April month is bad. April month went bad, and this is the total. I don't think we need anything of a total kind of here. We can delete this, and shortfall or surplus. Per strategy, we will come to know per strategy shortfall or per strategy surplus. And I don't think we need that. C2 by F2 is sufficient here. C2 by F2 is the expected profit, and per strategy we don't need per strategy shortfall. We just need overall shortfall, so that is fine. And that's where we are here. Now let's see how we go in future. For now, this is what it is. Now how are we progressing towards future? Now we are taking some cautious steps over here. We are only achieving 1,000 per month till June, so that will be only 4,000 per month, whereas we wanted to achieve 20,000, but that will come. So 20,000, and this is also like half of the profit, so around this will only give you 10,000 per month approximately. Okay, so we are taking very low risk because of this election phase. We have taken a very low risk strategy, but still we'll increase some risk at the upper end. Probably we'll try to increase the risk, because if the market goes up, we can actually wind up the complete strategy, right? So at upper end we might have to take risk. Lower end will take smaller risk. Smaller risk will come forward a little bit, and upper end we might take some little bit more risk. So if the market goes to 23,000, basically here somewhere around here 23,000. Okay, so this July one actually will start turning profitable. Okay, if market closes somewhere around here at 23,000, T plus 0 PNL here would be 1,474, and I think we can then wind up this strategy. So this is also an experimentation, so let's see how this turns out, or maybe we should actually go ahead and upgrade this. upgrade this bull. Okay, this bullish jade lizard kind of thing. We should upgrade this, and we can although also we can start selling some 26,000. Okay, here is the 26,000 CEs we can start selling. That is also an option. So just let's check out 26000 CE. The 26,000 CE of June. See June. Do we even have that strike price in June? Yes, we do have that strike price in June. And what is the value? It is 19 rupees. Okay, maybe we can sell that as well. In zero the margin calculator, what is the margin showing for that? Let's check down margin calculator. And if we go for FNO and we go for Nifty, and if we go for the June contract, go for these options, and if we sell the call at 23,000, let's just check 23,000. If we add this CE and if we add the CE here, okay, let's just do 23,500 CE if we add. Okay, so the overall margin is less, but if we add one more lot, okay, just hold on, we'll go ahead and add 23,600. If we add this, then the actual margin comes in. So that is also 52,000 only. That is not much. 50-60,000 we can sell this extra lot here, and that will not be an issue. So let's see when we get into the live market tomorrow. We'll see what are the things that happen, and we'll update you then. Thank you.